If you're thinking about starting to invest in 2026 but feel overwhelmed by Roth IRAs, 401ks, stocks, bonds, and ETFs, you're not alone. In this video, I'm going to explain how each of these investments works, what the tax benefits are, and give real examples of long-term returns. This is not about getting rich quick. This is about building wealth the smart, boring, proven way. Let's start with one of the best tools available. A Roth IRA is one of the most powerful investment accounts you can use for long-term wealth building. Here's how it works. You contribute money that's already been taxed. Your investments grow tax-free. And in retirement, you can withdraw that money tax-free. You pay taxes now, so you don't have to pay them later. Inside a Roth IRA, you can invest in stocks, ETFs, bonds, and mutual funds. The Roth IRA is just the container. You still choose the investments. Here's a real example. Historically, the stock market has returned about 7 to 10% per year. If you invest $6,000 per year for 30 years and earn an average 8% return, you would contribute about $180,000. That account could grow to over $700,000. And every dollar you withdraw in retirement would be tax-free. That's the power of a Roth IRA. Next, let's talk about the 401k. A traditional 401k lets you invest pre-tax money. That means your taxable income goes down today. Your investments grow tax-deferred. And you pay taxes when you withdraw in retirement. But the biggest benefit of a 401k is the employer match. If your employer matches 3 to 6%, that's free money. That's an instant 100% return on your contribution. Always try to invest at least enough to get the full match. Many employers also offer a Roth 401k. With a Roth 401k, you contribute after tax money, but your withdrawals in retirement are tax-free. This can be a great option if you expect higher taxes in the future. Here's an example. If you invest $500 per month, and your employer adds $250, that's $750 per month invested. At an 8% return over 30 years, that can grow to over $1 million. That's how retirement wealth is built. Now let's talk about stocks. When you buy a stock, you're buying ownership in a company. You make money in two ways. 1. The stock price goes up. 2. Some companies pay dividends. Stocks can be volatile short-term, but historically, they offer the highest long-term returns. For example, the S&P 500 has averaged around 10% per year. $10,000 invested 30 years ago would be worth well over $170,000 today. That's without adding another dollar. In a taxable account, you may owe taxes on dividends and capital gains. Inside a Roth IRA or 401k, those taxes are deferred or eliminated. Bonds are often overlooked, but they serve an important purpose. When you buy a bond, you're lending money. In return, you receive interest payments. Bonds are generally less risky than stocks but also offer lower returns. Historically, bonds return around 3 to 5%. $10,000 invested at 4% for 20 years would grow to about $22,000. Not exciting. But bonds provide stability. As you get closer to retirement, they help reduce volatility and protect your portfolio. Now let's talk about ETFs. ETF stands for Exchange Traded Fund. An ETF allows you to invest in hundreds or even thousands of companies with a single purchase. They're diversified, low-cost, and beginner-friendly. Some ETFs track the entire market. Others track the S&P 500, international stocks, or bonds. Here's an example. If you invest $500 per month into an S&P 500 ETF for 25 years at an 8% return, you would invest about $150,000. That could grow to around $460,000. ETFs are one of the easiest ways to build wealth over time. Here's a simple investing order for beginners. First, invest in your 401k up to the employer match. Second, max out a Roth IRA if possible. Third, use ETFs for diversification. Fourth, add individual stocks if you want growth. And finally, use bonds for stability. You don't need to be perfect. You just need to start. Investing isn't about timing the market. It's about time in the market. The earlier you start, the harder your money works for you. If you found this video helpful, make sure to subscribe. I'm on my own journey toward financial freedom, and I'm sharing what I learn along the way. Thanks for watching. I'll see you in the next one.